All right. Good morning, everybody. Welcome to our weekly mobile coaching session. My name is Patrick France, Senior Instructor here at VectorVest. Glad to be with you all. Hopefully everyone is doing well. If you guys can hear me out there, just let me know. Type in VV Nation into the chat. Let's get that going here. We should be live now both on Facebook and on YouTube. So welcome everybody. Hopefully you guys are all doing well once again. Hey there, Mark. Good morning. Drew, hopefully you're doing well. As always, Jay, happy Easter, happy Passover. Glad you could be here today. So Today we're going to be talking about, earnings season. Earnings season just kicked off. We had JP Morgan missing yesterday, moving lower. We had some pretty good reactions from the banks this morning, from the other major banks. They seem to have beat for the most part. It looks like this earnings season is definitely going to be a volatile one. So if you're worried about that volatility, what we're going to be talking about here today is how to stay more disciplined, stay systematic instead of letting your emotion take over. So we're going to be talking about certain aspects of knowing when to sell, different ideas on how to protect yourself, briefly talk about maybe some options trades you guys could potentially do. So we're just going to really be talking about that, focusing on, how to remove your emotion out of it and stay systematic. Because with earnings season coming up, if you're worried about it, you need to have a plan in place so that way you can stay disciplined. And that way, if the stock goes against you and you're panicking, that's when you tend to let your emotions take over, and that's when you tend to make some mistakes. So we're going to go over a few things you can do to help reduce that stress level and stay systematic in your investing. So if you guys can hear me out there, let me see some VV Nations in the chat. Should be working. I should have audio. Everything should be good. I just want to make sure we have that. While we're waiting for that, as always, if you guys are enjoying today's session, make sure, as always, smash that like button. Subscribe to the VV Nation if you're not already subscribed. And also, as a reminder, Glenn Tompkins does have Trading Thursday at 2 p.m. today. So if you want to see the major headlines that are impacting the market, make sure to go check that out later on here on both Facebook and on YouTube at 2 p.m. Eastern. There we go. Seeing the VV Nations. All right. Awesome. Thank you for that. Hey, appreciate that, Jay. Okay, so today's session is brought to... That's right, Jay. Patience, patience, patience. All right, so as always, if you're brand new to these streams, what we typically do is we start to take a look at what's happening in the market today. Then we'll dive into our topic of discussion. Then, as always, we finish off with the fan favorite of analyzing any stock that you want to take a look at in less than 10 seconds. So if you want to see your stocks analyzed, make sure to stick around towards the very end and we'll analyze those for you in a little bit. Melinda is saying first time here. Welcome, Melinda. Hopefully you're doing well and having a good day here today. All right, so looking at the market right now, we are currently one tick into the red. Therefore, the market is mildly bearish and VectorVest does not advocate buying any stocks at this time. We've seen that, no surprise there. We've seen that, advocating not to buy stocks for quite some time. And that's because we really just haven't seen enough consistency here in the market to really change that. So as we scroll down, we get to the color guard. Now, the top row of lights in our color guard is where that gauge gets its colors from. And so every single day we analyze the market based on three components here. First and foremost is the price, which is looking at the price of the VectorVest composite. The VectorVest composite, for anybody new, is an arithmetic indexed average of about 9,100 stocks. So this gives you a better representation on what's actually going on in the market, because it's not just looking at the Dow's 30 or the Nasdaq's 100 or even the S&P's 500, but it's looking at 9,100 stocks. The next one is the RT, or relative timing. Now this is on a scale of 0 to 2, and it's looking at the short-term price trend of the overall market. So above 1 would indicate the short-term trend is up, below 1, short-term trend is down. The next, buy to sell ratio, or BSR, is looking at the overall health of the market. So here at VectorVest, we give a buy, hold, and sell rating on every single stock every single day. And we use that ratio between the buys and the sells to get an idea on overall market health. So if there's more buys and sells, that would indicate overall market strength. And if there's more sells and buys, as there is now, that indicates overall market weakness. And then the trends of these three indicators are comprised to come up with the MTI, or the market timing indicator. This one's on a scaling of 0 to 2 as well, and it's looking at the underlying trend in the market. So at 0.79, we can see the underlying trend in the market still remains down. After that, we get the trend column. As always, we show two parts of the trend each and every day. The first part is looking at the short-term or simply weekly trend in the market, or what we like to call the primary wave. And as we can see, it's down since we're lower on a week-over-week basis here. Second part is just looking at the underlying trend, or just reiterating that MTI once again. So since the MTI is below 1, the underlying trend in the market is also down. And then last but not least, we finish off with the calls column, which stands for our confirmed calls. Now, our confirmed calls are our most conservative timing system here at VectorVest. They're our last signal we get to get in and our last signal we get to get out. So as we can see, we did get a potential confirmed up signal for a few weeks, but that was short-lived, and now we're back into that confirmed down as of Tuesday this week. So as always, heed the color guard, and if you ever want to see an update on what's going on in the market each and every night, as always, we have the daily color guard report found here in the app right at the top there, the daily market update, where we recap what happened today, what news you need to be aware of for tomorrow, how to prepare yourself for tomorrow, and basically it makes sure that you never get caught off guard with anything that's going on here in the market. So if you're new, that's one of the easiest things you could possibly do to help get yourself on the right track of the market, is by watching that report on a nightly basis. Hey there, Maria. Hopefully you're doing well. Hopefully you're having a good day so far today. Okay, so as always, we scroll down, take a look at the advanced declines. And the advanced decline is an important indicator to look at on a daily basis, especially if it's a day that you're looking to buy. So if you're looking to buy a stock long, you want to see twice as many stocks advancing and declining. And if you're looking to play the market to the downside, just the opposite. You want to see twice as many stocks declining than advancing. So right now we're sitting at about 35% of stocks moving higher and about 52% of stocks moving lower. Therefore, not meeting that 2-to-1 ratio we like to see. So most likely at this point, we're probably just going to be sitting on our hands, being patient, waiting for the right opportunities here. And then finishing off on the home page here, taking a look at the major indices. Right now, the Dow is up 0.3%. NASDAQ getting hit pretty hard here today, down 1.3%. S&P 500 down about 0.5%. Overall, the VectorVest composite is down about 1/3% so far for the session. I thought the markets are closed tomorrow. They are. So I believe the markets are closed. If somebody just wants to verify that. But tomorrow, the markets, it should be a holiday shortened week this week. So markets should be closed tomorrow. So therefore, no trading for tomorrow. Today's the last day of this week for trading. So just wanted to make sure everybody's aware of that there. All right. So once again, talking about earnings. Now, as we saw, if you haven't been paying attention, we had JP Morgan reporting yesterday, missing pretty much on every single aspect. They didn't have a lot of ties to Russia, so therefore that wasn't really a big impact. They just missed on a lot of different aspects of their performance. They still made money, but not nearly as much as they were making the prior year, which was kind of an inflated number because they were taking some of that money they had on reserve, so that way they could handle defaults and foreclosures from the COVID pandemic. They took that off, so that boosted their profits a little bit, or their numbers for that quarter. But then a year later, they're still making money, but not nearly as much as they were. So therefore, that definitely made them look a little worse than they were, but still they didn't really beat on any aspect of their earnings. Now, the only positives that did come from their earnings call was their talk and their thoughts on the economy. They said the economy looks strong in the short term. Everything looks pretty good. Yes, inflation is rising, but it seems like some of the major speed bumps that we've witnessed since the beginning of the year are starting to subside. And so, things are looking pretty good for the markets short term. Now, when you go out a little bit longer, maybe not so much, but at least for the time being, markets still look pretty good. Now that you had some other banks coming out today, I think Wells Fargo, Morgan Stanley, Goldman Sachs, The Street, and a few others. I think Wells Fargo was the only one of the other major banks that didn't beat earnings here. So Wells Fargo, JP Morgan were the two losers, but everything else seemed pretty strong. I was expecting to see Goldman Sachs really kind of missed the mark, especially since they deal with global investments and they had a lot of ties to Russia. But somehow they're able to manage that and keep that going. So banks were looking a little stronger than what we initially thought after JP Morgan yesterday. But that just kind of goes to show, you have a lot of mixed results, and I think that we can expect to see that throughout the rest of this earnings season. I think we're going to see some stocks really accelerate, some stocks taking big hits. We already saw some of the tech giants taking big hits last quarter, or the beginning of this year for the Q4 of 2021 earnings. So it's going to be a pretty volatile ride. So I don't think we're quite out of the woods yet when it comes to volatility. So what are some things that you can do to help protect yourself? Well, first and foremost, let's go ahead, talk about the watch list. Keep a watch list of your stocks. Building a watch list is one of the easiest things you can do. All you have to do is simply, well, if you're brand new, you'll see a button that walks you through it all. But if you already have one created and you need to create a new one, tap on that plus symbol in the upper right, start to type in your symbols, and then once you type in your symbols, it'll ask you to give it a name. So we'll come down, we'll just pick a random one here. Let's go to our stocking stuffers for 2022 and use this as some of our examples here for the day. So with that, one thing that you can do, we'll look at these in a little bit more detail in a second, but one of the very first things as a new investor or somebody who's brand new to VectorVest, or even if you've been here for a while, sometimes it's good to have that reminder. And Jacqueline coming in as a new subscriber, welcome to the VV Nation, Jacqueline, glad to have you here. But one of the things you could do is make sure you're following a set of rules to know when to close your position. As always, before you ever get into a stock, you should always know where you're going to be getting out. Now, there's a couple of rules of thumb that VectorVest goes over that can help you get on the right track. The first one is setting yourself a stop loss or a maximum amount that you're willing to lose in that position before you decide to cut it and move on. Now, the general rule of thumb is what we like to call the 1% rule. Simply put, you should never lose more than 1% of your overall portfolio value in any one position. So let's just say, just to make the math simple for everybody, let's say you have $100,000. Well, 1% of 100,000 is $1,000. So if you got into 10 stocks, let's say you split it evenly, so that's 10,000 per position, then in each of those 10 stocks, you should set yourself a 10% stop from your initial purchase price. That equates to that 1,000 per of your overall portfolio value. So obviously you could do less than that, but no more than that. The second rule of thumb, set yourself a target. Now, this is something that only you can really answer, but ask yourself and be honest with yourself. What type of a return on your investment are you comfortable with taking? If you're a shorter term trader, maybe you're looking at, let's say 20, 30, 40%. If you're a longer term investor, maybe you're looking for 50 to 100%. But whatever that number is, set that as your goal. Because once you meet your goal, you can move on from that point. And then third is what we like to call the 50% rule. So basically anything over a 10% gain, never give back more than 50% of that total profit before cutting your loss. So if you're up, let's say 20% and it pulls back and you're only up 10%, lock that 10% in. No need to risk it and let that continue to go down and then end up either breaking even or end up, seeing that gain turn into a loss. So those are some criteria to set yourself some stop loss and, some money management rules going forward. And I see Rolly's coming in, tuning in from San Diego, California. San Diego, gorgeous area. I have family live out there, so hopefully you're doing well, Raleigh. It's a little early for you, but I hope your day is getting started in the right way. All right, so that's going to be the stop criteria. Once you have rules in place, then you can stay more disciplined and take a lot of that questioning, a lot of that emotional guessing off of your plate, and make sure that takes that stress level down, helps you stay more systematic essentially. So that's one rule of thumb. The second thing you could possibly do is utilizing your charts. So let's go ahead, take a look at NUE, for example. Well, actually, Bank of America, banks are reporting earnings. Let's take a look at the banks. So pulling up the chart of BAC, as we can see, we've shown the price shown in candlesticks. We have a 3 and 8 exponential moving average, and then we have that earnings per share at the bottom. So using a set of moving averages is a great way to potentially avoid some issues. So with this one, instead of letting it ride down, if you start seeing your stock declining before that earnings date and you have, let's say, some moving averages set up on it, take your profit, close out of the trade at that point, maybe wait until after that report and see if it reports favorably, and then you can always get back in and take advantage of that new run. But if it doesn't report favorably and it continues to go lower, you've now avoided that potential risk there. You've avoided that bigger loss. And so you've minimized your loss at that point, and basically freed up or kept more of your powder dry. You know, that's one of the big things that a lot of people do is, yes, you have some great winners, but if you're not managing your losers very well, that can wipe out your portfolio and take away all those gains you got from your good winners. So by cutting your loser quickly and letting your winners run, that can help manage that risk and help your portfolio, you know, stay afloat and thrive there. So utilizing moving averages, or, you know, let's say support resistance, any sort of technical indicator, letting that be your guide can definitely be a benefit. We've talked about charting a lot. We've talked about different technical indicators over the course of the last few months. So make sure, if you're wondering, you know, if you want to see more on that, go check out some of those previous recorded videos, and that should help you out, get an idea on how to really utilize those technical indicators a little bit better. So then that's one of the guidelines. That's guideline number 2. Let's talk about guideline number 3. To do that, I'm going to change the lower graph here. So at the bottom, I'm going to choose relative timing, or RT. Go back, maximize it. RT, once again, relative timing, is looking at the short-term price trend of the stock. Now, it's cast on a scale of 0 to 2 to keep it easy for you guys out there. Anything above the level of 1 shows the short-term trend is up, and below the level of 1 shows that the short-term trend is down. So it's a very smart indicator and unique out there, because it's not just looking at, you know, hey, is it moving higher or lower, but it's also looking at the magnitude of the move as well. So you get a lot of insight just by utilizing the RT, or relative timing indicator. So if you're owning a stock and you're coming up to earnings and that RT is below 1 or getting close to 1, that tells you that's the time to start tightening up your stops. And then if it crosses below 1, using that as an indicator of making sure you're taking your profits and getting out of the position is a great way to know, or is a great way to lock in that position there. So once again, RT, if it's heading towards 1, that tells you should be tightening up your stop. If it crosses below 1, that tells you maybe, hey, it's time to get out. If you have a good gain, take that profit off the table. If you have a minimal loss, maybe it's time to minimize that even more, close it out instead of risking it and seeing what happens going forward. So, you know, using some defensive actions like that. Now, this brings us to the next part. We're not really going to talk about it in a graph or anything, but it's just really talking about options. So let me see in chat. If you guys are familiar with options, type in 1. If you're not familiar with options, type in number 2. I want to see who's familiar with options and who's not, to know, you know, how in depth we should really get with it. Let me see. Okay, seeing a 1. Mike's familiar with options. Waiting to see other people's responses. So seeing a few 1s so far. There we go. All right, so okay, a few more 1s, a couple of 1, 2 so far. Hey, and if you don't know options, that's fine. You know, not everybody does. There's a book that I usually keep in the background, the Options Playbook by Brian Overby. I highly recommend, if you're interested in options, go check that book out. It's a great read, really easy to understand, and gives you, you know, pictures and details to help you understand how you should be setting up certain trades. So, okay, so I'm seeing some more 2s now starting to come in. That's fine. Once again, options are a great way to help supercharge your portfolio, but you can also utilize options to help mitigate risk. That's the beauty of options, is they're not just, you know, a way of leveraging your portfolio. You can also use them to manage your portfolio and protect some of your positions that you own. So one of the things you can do, talking about one of the basic options trades, is buying a put as an insurance policy. Buying a put is not a bad thing necessarily. It's more of, you know, we're looking at it as an insurance policy essentially. So what I mean by that is, you know, if you're worried about the stock, if you have a good gain in it and you're worried about earnings coming up, buying a put is roughly 1/10 of the cost of buying the shares. And you can use that as a hedge. So that way, if the stock doesn't go your way, or if the earnings don't go your way and the stock that you own starts going down, that put option that you bought will start going up, therefore offsetting that loss you're taking in the underlying stock and helping you, mitigate some of that loss there. And so the great thing about it, it's an insurance policy. So if after, let's say, the earnings are good and the stock goes up, the capital appreciation on your stock will start rising. That put option will lose value, no surprise. But the great thing about options is you can close them out whenever you want. So you just go and sell. You take a little bit of that premium back, but you lose a little bit for having that insurance there, essentially. And as long as you follow similar rules to what you're doing with your stocks, it can still be extremely useful here. What to do if we already lost more than 10%? Where do we start? So Susie, what I would recommend to do is, just like we talk about when we go through the basics of VectorVest, go through the chart, starting off weeding your portfolio. If you notice that, a stock has a sell rating, if it's already down more than it needs to be, you need to ask yourself, and only you're going to be able to answer this, are the reasons you purchased that stock still true to this day? If the answer is yes, well, maybe you'll continue to sit through it and hold. But if the answer is no, then that's pretty clear that, hey, all right, it's time to face the facts. This isn't going well. I need to cut it now before I continue to lose more. And then that way you free up cash to be able to reinvest and get your portfolio back on the right track by investing in stocks that will make you money rather than sticking around and praying and hoping that one stock that's down a lot comes back. So that's the best answer that we can give for right now. All right, so getting back into the options trades, buying a put as a insurance policy is a great method to protect yourself in these volatile markets. Now, if there's a stock, if you're wanting to trade a stock based off of options or based off of an earnings play, some potential options you could look at would be a strangle or a straddle. Whether you expect if your the stock to really explode one way or the other. Basically, you're splitting the price, and then as one starts to take off, that'll offset the other one. And then you can let that winner run. You cut your loser quickly after that report, and then you let your winner continue to grow. Looking at some other potential ideas, you could sell if you're worried about it and the company hasn't had great earnings. You could sell a call option. That way you take in that premium. The only thing that's different with that is you're limiting how much you can take in. So how much risk or how much loss you could potentially mitigate there, because you take in that premium. Once you take in that premium, it's set. You're never going to get more. So either, let's say you're down $1,000 in the stock, you get $500 from selling that call option. Well, then the most you're going to be able to offset is that $500. So you still have a $500 loss. Granted, the loss is smaller now, but you still have, some of that loss. Bear put spread. Yeah, collar, hope, and pray. I mean, there is that option. If you're more risky or more aggressive, that's definitely an option there, Jay. But a bear put spread is another good idea. I'm trying to think of some of the other ones. Selling a put. If you wanted to sell a put, if you like that stock, worried about it, okay, it may miss earnings, but the company is still making money. It's still a good company. You could sell a put and take in that credit. And then also, only do that though on stocks that you're interested in getting into. So let's go back out of here. Let's go find a different example here. Let's go NUE. So NUE right now is trading at 165. Well, let's say, earnings are coming up on Monday. So what you would do, you say, the stock's at 165. I wouldn't mind owning it if it was down at 140 or so. So you sell that 140 because as a seller, you have the obligation to buy it if it goes to that point. So you sell the 140. If it comes down, all of a sudden it's in the money. You get put the stock at 140. You also take in that credit that you sold the call or the put option for. So therefore helping reduce the cost of buying 100 shares at 140. and then you're owning the stock that you were already wanting to own to begin with, plus you got that little bit of extra credit to help you reduce the cost of buying that stock. So, that is another way of utilizing put options, even being a seller. Now, as a seller, though, you have the obligation. So if it goes into money, expect to have that stock put to you. So therefore, meaning you have to buy it. So you have to have that money available in your account to be able to sell that put option. So that way, if it does get put to you, you have the cash ready to go to be able to buy that 100 shares. So that is one thing to keep in mind. But once again, make sure if you're interested in learning about options, check out the Options Playbook. It's a great read to help you understand any options trade out there. So that's going to be the main key points that we wanted to focus on. One, make sure you have rules in place to manage your positions, or some money management criteria such as stop criteria, setting yourself a gain, setting yourself a loss maximum, those sorts of things. Two, use the charts. Let the charts be your guide. So look for the moving averages. If the moving averages are starting to show weakness, use that as a time to protect your position. Either take your profit off the table and wait for that to reverse, or or wait for that earnings call even, and see how it handles it from that point. Three, utilizing the RT. We talked about this in our 4 tips of knowing when to sell. RT can be a great indicator. It's a very smart indicator. And if you start noticing drifting lower, heading towards that level of 1, that tells you, hey, maybe I should be tightening up my stops. If it crosses below 1, hey, maybe I should be protecting my profits, moving to the sidelines on this position for right now, wait for a better buying opportunity. And then the 4th one is utilize options. One of the rules, I forget which chapter it is. I can probably look it up. But one of the rules in the Green Book, or one of the chapters in the Green Book that Dr. DeLito talks about, is how to supercharge your portfolio. Looking through here, where is it? Oh wait, no, it's not in here. It's in the 7 secrets, which is in the VectorVest software. The 7 secrets to make money. Dr. DeLito talks about, learn how to trade options. If you're not familiar with them, take your time, learn them, get the basics down first, then slowly start to, move into them and play with them and test the waters, if you will. Don't go jumping on right out of the gate and go buy, as many contracts as you can and try to load your portfolio with options, but test the waters, buy a contract or 2 at a time, and, make sure that you're buying the right time or time frames that you're looking for. In general, if you're buying an option, VectorVest typically recommends no less than 3 months. That way you give yourself enough time value baked into that contract to make sure that your trade is successful. And also, if you buy a contract, let's say 3 months out or even more, you always want to be out of that option within the last third of that contract length. So going back to it, let's say you bought an option for 3 months out. Well, you never want to be holding that contract for that last month. So if you buy 3 months out, you're expecting that move to occur within the next 2 months at most. Because that last third of that contract length is when you really start to see the time value decaying, and that eats away at the value of that contract or the option. So never hold an option for the last third of that time frame there. And then if you're selling a call or selling an option, typically you want to do shorter time frames, because you want that contract to expire worthless unless you're selling a cash secured put and you're looking to get put that stock at a certain price. Then you may sell it a little longer, but typically 2 weeks, 3 weeks is about as much as you want to go a month. Within a month or so, you don't want to give that contract too much time to have it start to increase in value, because as a seller, you want the opposite to happen. So those are some few tips on the options side of things for everybody who's in here that does trade options. And also, we do offer a options course. So if you're interested in learning about options, we have a beginner's course. We also have a more advanced course. So if you're interested in learning more about options, give our support a call. They'd be glad to help you out and go over those different courses for you and talk about what's in them for you. All right, so I used a Ameritrade cash account and IRA. There you go. Do you recommend to dollar cost average for TQQQ? So I will never recommend dollar cost averaging. Some of you guys may have heard the story. We'll get into it here for a second, but some of you guys that are new may not have heard this one before. So many years ago, probably 5 or 6 years ago, at least at this point, I was working with this customer who's in the Canadian market who had a money manager managing her funds. Well, she didn't really know about the markets, trusted her money manager, and there was this one stock that she liked initially, and it started going down. Her money manager called her and told her, hey, that stock that you really liked, it's now cheaper than what it was before. So we should cost average down so that way we can get more shares of it. She said, sure, that sounds great. Awesome. Well, this happened a few times over and over again for the course of about a year to 18 months, I believe it was. By that point, she realized what was going on with her portfolio and why it was so deep in the red. And that's when she decided to pick up VectorVest and ended up getting me, and I worked with her one-on-one to help her get her portfolio back on track. By this point, her portfolio was pretty much all into this one stock, and it had gone from, I believe, roughly around $10 a share. And by the time I was talking with her, it was about $2.50 to $3 and some change. So as you can tell, a pretty big loss. And she didn't realize what was going on. She didn't realize that the stock was going down so much. She just knew that, the stock was lower. So yeah, buying some more at a cheaper price. It's cheaper than what I last paid for it. So why not? But what she didn't realize is that her whole portfolio is now being put into one stock, continuing to go lower and lower and lower. So after seeing that, dollar cost averaging is something I was been pretty neutral on for the most point. But after, experiencing that and seeing that firsthand of how that can impact people, I will never advocate for dollar cost averaging up or down. Just like in when you go to Vegas or go to a betting table, put your money up. That's your money that you're willing to bet. If you lose it, you lose it. If you win, great. Don't keep throwing money at a trade or at a bet that you're making essentially. Keep your positions equally weighted, because that's another thing that can happen. You're overweighted in one stock, then all of a sudden, if that stock has bad news, your portfolio tanks, and that wrecks the whole entire portfolio that you've worked hard, your hard-earned money to grow. That can be ruined by ending up without realizing it being too weighted in one position. So that's going to be my thoughts on dollar cost averaging. What is a better signal for market timing for longer term investors? So Walter, best thing, confirm calls. Simple as that. No matter no matter what type of investor you are, know that, you don't want to just always be sitting in those stocks and just forgetting about the markets. Because, if another 2007, 2008 occurs, or another 2000, you don't want to be sitting on long-term cash or long-term positions, watching them, that you've been buying over the last couple of years, watching them get devalued by 40, 50, 60, 70% before they start bottoming. That will not do good things for your psyche. So from a psychological standpoint, confirmed calls are going to be the best things. Now, sometimes you are going to have some whipsawing. That's going to happen with anything that you do. But at the same time, rather be cautious and heed the color guard rather than throwing 3 sheets into the wind, not paying attention to the color guard, and then being like some of the people who were sitting in those positions all throughout 2008 and then sold at the bottom in 2009. That's why, VectorVest is so important. It's interesting. When I first started here, it was 2011. We saw a huge increase in people coming into VectorVest that got caught off guard in 2007, 2008. So those kind of markets, you tend to see more people coming into VectorVest. And now is a better time than ever to make sure you have VectorVest on your side, because we've been around for 35 plus years now, and we've never failed to signal a major market turn. So making sure you stick with watching the daily color guards, stay up to date with what's going on in the market. That will help keep you protected regardless of what's going on in the markets. What's the best way to enter a position? Always by stop order. Depends. Different strokes for different folks. Some people like slowly sticking their toes in the water and building that position up till it gets to a full size. Some people like taking that full position at a time, but only doing maybe 1 or 2 at a time until they reach their max of 10. Some people like using different types of order types. Really different strokes for different folks on that one. Yeah, Maria's saying cost averaging can get you in trouble. Happened to her. Yes, but that's why we stick with not doing that anymore. The Options Advanced course is the one with Ron Wheeler. Yes, Stefan, that is the Advanced course is the one with Ron Wheeler. All right, so that's going to pretty much do it for what we needed to be talking about today. Hopefully this conversation that we had here is starting to get the ball rolling to make sure that you guys are prepared going into earnings season with a few different ideas of how to approach your stocks, your personal stocks, and their earnings announcement that they have coming up. So if you guys have stocks that you want to see analyzed, go ahead, start throwing those into chat now. We'll go ahead and show you how easy it is to analyze any stock out there in less than 10 seconds with the Stock Advisory app. So go ahead, let's see those stocks that you guys have that you want to see analyzed here. And while we're doing that, all right, cool. Just taking a look at some of the trades I have here. Jay said it earlier. I hadn't seen it until just now, Jay. GME's doing pretty well right now. I like that one. All right. So Glenn is starting off with Gush. Let's take a look. GUSH. So Gush is an ETF. Now with ETFs, since they don't report quarterly earnings, VectorVest makes it pretty easy to analyze. Your RV and RS are always going to be pegged at 1 because those are fundamental indicators. And since it's an ETF, they don't have the fundamentals like a typical stock does. So your primary focus is RT or relative timing. RT being above 1 tells us the ETF is favorable. So overall, stock has a buy rating. Let's see what else we have. HPK. All right, HPK, poor long-term potential, a lot of risk associated with it. However, you're in a really strong short-term uptrend. It's a momentum play. It's a speculative momentum play. So overall, it's favorable if you're into speculative trading. If you're a momentum trader, day trader, yeah, it's a great stock. If you're not, maybe look for another option. All right, let's see. F. So Ford, great long-term potential. So we'll go through these 4 indicators now that we have one with different analysis here. So the first one we're looking at is RV or relative value. This is looking at the long-term potential over the next 1 to 3 years. So above 1 tells us this has good long-term potential. The next indicator is RS or relative safety. Basically, it's the amount of risk you're taking compared to the average stock out there. Below 1 tells us there's more risk in this stock than the average stock out there. Next one, RT or relative timing. Once again, that short-term price trend indicator. This one's below 1, so that tells us it's in a decline currently. So overall, combination of all 3 of these summarized into 1 or the VST rating. Below 1 tells us overall the stock is not favorable currently. ACI. Let's go take a look. ACI, good long-term potential, but a little bit more risk associated with it. You do have a steady short-term uptrend. Overall, the stock is favorable. I'd keep an eye on the RT though. Anything below 1.1, in my personal opinion, is not worth it because that means the stock's just barely treading water. So I'd keep an eye on that RT. CTRM. Is that you, Glenn? For anybody who doesn't know, Glenn is a big fan of CTRM. CTRM has great long-term potential, does have a lot of risk with it. It is an aggressive stock. Lately, it's been on a pretty hot run, so timing is up. Really strong short-term uptrend. Overall, stock is definitely favorable. David is asking the Options Trading Playbook. Who's the author? It's Brian Overby. Let me see. I wonder if I can get this in the camera. This is what it looks like. So, Options Playbook. Now I just hope that doesn't fall down because I didn't put it back properly. All right. If you guys hear a loud bang, that's what it is. All right. So there's CTRM. Let's see. DWAC. DWAC, poor long-term potential, a lot of risk associated with it. You're in a steady free fall. So yeah, definitely not favorable here. Let's get some of those Facebook stocks as well. Let's go. There we go. Hey, Alex, glad to see you here. Nike, NKE. So Nike, good long-term potential, less risk associated with it. However, timing is pretty much flat. So I need to see that timing pick back up. It's a great stock, good fundamentals, but once again, timing is the big concern there. And David coming in with a $4.99 super chat. Thank you, David. I appreciate that. VV Nation, show David some love. Thank you very much, David, for that. So overall, Nike's a good stock, but we need to see that timing pick back up. Let's see. AMAT, AMAT. Good long-term potential. Solid fundamentals, so less risk associated with it. However, timing is an issue. Timing is 0.69 tells us it is in a strong decline currently. So overall, stock is a good stock, but not the right time to be long in it. VOLT, let's see. VOLT, good long-term potential, but a little bit more risk associated with it. Really strong short-term uptrend, but most likely this looks like a buyout since you look at the price action, you can see it's flat. Stock's not really moving. So most likely this is a buyout, so you can't really buy it. Probably going to pass on that one for right now. Upstart, UPST, yeah. Upstart, good long-term potential, but a lot of risk associated with it. You're in a steady decline. Overall, this stock is not favorable here. Let's see, Mullen, MULN. Mullen, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, definitely not favorable here. Let's see. WBX. WBX, poor long-term potential, a lot of risk associated with it. You're in a steady decline, definitely not favorable. GOGL. GOGL, good long-term potential, but a little bit more risk associated with it. So more of a speculative or an aggressive play here. Timing though, 1.86 tells it's in a really strong short-term uptrend. So overall, this stock is definitely favorable here. All right, let's see. DSX. Diana Shipping, good long-term potential, but does have a little bit more risk associated with it. You're in a really strong short-term uptrend, so overall, definitely favorable. Shipping stocks have been pretty hot recently, CTRM being one of them. Let's see. ANDE. ANDE, good long-term potential, but a little bit more risk associated with it. Really strong short-term uptrend, so overall, stock is definitely favorable. Let's see what else we got here today. NVAX. NVAX, good long-term potential, but a lot of risk associated with it. You're in a steady decline. Overall, definitely not favorable here. SST. SST, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Definitely not favorable. This is a Wall Street bets play, so be careful with that and take that with a grain of salt there. Let's see. Chew. So for Chewy, poor long-term potential, a lot of risk associated with it. You're in a steady decline. Overall, not favorable. CVE. CVE, good long-term potential, less risk associated with it. Nice, strong uptrend. Overall, definitely favorable. Energy in general is going to be a pretty good play. Even though, it looks like it's worn out, still keeps making money. So, still a viable option right now. Twitter, poor long-term potential, a lot of risk associated with it. You're in a steady uptrend though on a short-term basis. Overall, the stock is not favorable. This stock is trading completely on news. So if you're not following the news and you're somehow can't predict the news, I'd probably stay away from this for the time being. Let's see, POU. Not seeing POU there, Femi. DLTR. Dollar Tree. So Dollar Tree, poor long-term potential, but really good fundamentals. So safe, or really safe stock. Overall, in a really strong uptrend. So therefore, definitely favorable here. This is more of a conservative play, but if you're worried about, recession, if you think we're at the start of another 2007, 2008, Dollar Tree did really, really well then, could do really, really well in this point. AMZN, Amazon, about average long-term potential, less risk associated with it, so consistent, strong earnings. Timing is a little off though, 0.94, it is in a slight decline currently. Overall, the stock's about average. ZIM, great long-term potential, but does have a little bit more risk associated with it. Overall, on a short-term basis, you're pretty much flat. Stock is a good stock because of that good long-term potential, but know that you're going to be taking a little bit more risk. Also, keep your eye on the timing as well. Let's see, TGT, good long-term potential. About average safety, though. A little bit better than average, but not a whole lot better than average. Nice, strong uptrend on a short-term basis. So overall, stock is definitely favorable here. Let's see. Fuel Cell, FCEL. Fuel Cell, poor long-term potential. A lot of risk associated with it. You're in a slight uptrend on a short-term basis, but not enough to offset the amount of risk you're taking with it. So overall, stock is not favorable. Was up 10K in Upstart and watched it all go away. So, David, if I'm not mistaken, we talked about this a while back when Upstart first started taking off. Wasn't Upstart the one where they had that guy, I think, on Squawk Box or CNBC, really ranting and raving about it, and then when the host asked him what it does, he said, and he froze, and then he ended the call instantly. That in itself caught my attention and was one of the reasons why I stayed away from it. Then I looked at the VectorVest analysis of it and it had, poor RV and RS ratings at 100. It's trading almost at $300 at that point. You don't trade that high of a price with that low of an RV and RS score. So, be careful, be cautious with those kind of plays. Let's see. CHPT. We'll do two more here for the day, then we'll start wrapping it up for you guys. So CHPD or PT, poor long-term potential, a lot of risk associated with it. You are in a steady decline. Overall, the stock is not favorable. This is one, I believe, that's the electric charging stations. If you look at the 1 year, let's go take a look at the graph real quick. You can see a consistent pattern here, here, and here of lower highs, lower lows. By the basic definition, putting it in a downtrend. Draw yourself a trend line. If you're wanting to get into this stock, if you like, that space, it still is early on in that industry there. Draw yourself a trend line, connect these lower highs. Once you see a breakout of that trend line, check volume, make sure you have strong volume to confirm that breakout. That will be your entry. That will be the way you'd want to play a stock like that. All right, and last but not least, we'll take a look at NVIDIA, NVDA, there we go. So NVIDIA, great long-term potential, less risk associated with it. However, timing is the issue with this one. It's a great stock, just not the right time to be long in it. Overall, the stock is favorable, just need to wait for that timing to pick up, and that will be your cue to start jumping back on board. So if you guys have enjoyed yourselves here today, if you guys have learned something, learned a new tip or trick, make sure, as always, smash that like button. Tell all your friends about what we do here and tell them to come hang out, try to learn a little or thing or two about managing their own portfolios and becoming more successful in the markets. So let's go ahead, take a look at the homepage one last time. Right now, we are still one tick into the red. Therefore, the color guard is mildly bearish and VectorVest does not advocate buying any stocks at this time. If we scroll down here, we still see that one red light coming from the price column. RT and BSR are pretty much flat from where we noticed them at the beginning of the session. Looking at the advanced declines, it kind of confirms what we were seeing. We were sitting at about 35% of stocks moving higher and about 52% of stocks moving lower earlier on. Now we're sitting still at 35% of stocks moving higher, but now 53% of stocks moving lower. So that decliner is starting to pick up a little bit here. As we scroll down, take a look at the major indices one last time for the day. The Dow is up about 1/3%. The NASDAQ climbing back a little bit, down now only about a percentage point. S&P 500 down about 1/3%. Overall, VectorVest composite improving slightly, but still down about 1/3%. So, as always, folks, let the trend be your friend. Let the color guard guide you through this volatility and let it, reduce that stress on managing your portfolio. So, I hope you all have a great weekend. Happy Thanksgiving, happy Easter, happy Passover to everybody out there. I hope you all enjoy, as always, spending time with your family. I say this every major holiday. Take this long weekend to spend as much time as you can with your family, because that's really the most important aspect of holidays, is spending that time getting to see family that you may not see nearly as much as you probably like to. So enjoy the time with your family. Turn off your cell phones, turn off all technology, and just get to hang out with people, have that interaction there. So be safe this weekend, and make sure to be here next week as we kick off our next mobile stream. And as always, if you guys are free around 2 p.m. Eastern today, go check out Glenn Tompkins once again on Facebook and on YouTube as he does his Trending Thursdays. So until next time, be safe, adios, and toodles.